You're very welcome to this series of pre-scene videos on the November 2018 management case study. The pre-scene material released recently by CIMA deals with the fictional company of Grapple. And over the course of the following videos, I'll be taking you through the contents of this pre-scene document, working through the most important issues being presented in the document, relating them to typical exam questions, and talking about what could potentially come up on exam day, relating them as well to your E2, F2 and P2 theories, and generally trying to make sense of the pre-scene materials ahead of your exam. So jumping right into the introduction, you're told that you're a finance manager with the Grapple Drinks company. You report to David Guy. He's a finance director. So you're likely to have plenty of interaction with David on the day of the exam. Your primary responsibilities, we're told, are associated with management accounting. This means that you're liaising with colleagues from a wide variety of areas, including sales, human resources, R&D, and operations. David concentrates on the financial reporting and special projects, but he also delegates responsibility to you. So in this introductory section, we can immediately see that you could expect anything to come up on exam day. This section doesn't exactly narrow it down in terms of what you could be dealing with on exam day. It could be management accounting, could be financial accounting, or it could be anything from a wide number of areas: sales, HR, R&D, operations, which you would have covered in your E1 and E2 studies. You would have touched on a lot of those areas. So you can expect anything in the management case study. It expects you to draw on as all of your experience as a CIMA student and to draw on theories from the E, F and P pillars. So you're a finance manager. If you have come through the operational case study, you'll know for the operational case study, you are quite low down in the pecking order. You're typically a finance officer. Here you've progressed to a managerial role. So the interactions you have with people will be different. You'll be dealing with more senior managers, directors, etc. And the financial manager role is laid out in the following points. So let's reflect on what this role actually entails. You will be monitoring the implementation of strategy, whereas the operational case study was all about the day-to-day execution of tasks, in other words, the operations of the business. Now you are going to be overlooking the implementation of the high-level strategy that will be decided by the directors and senior management of the business. You'll be ensuring that it is well employed. You will have a medium-term focus, which will influence the kinds of investments that you'll be looking at, and also you'll be dealing with product launches and their associated prices. So these are aspects of the company that have an influence on the mid-term evolution of the business. Again, comparing it to the operational case study, your focus then was short-term in nature, up to 1 year. A mid-term focus would be looking at 1 to 3 years perhaps. And when you get to the strategic level, you'll be taking a long-term view of the business. The management of risk, identification, assessment, and management of risk for a finance manager is going to be key as well. And related to the kinds of investments that you make over the midterm, you'll be drawing on more long-term financing. You'll be drawing on long-term loans. You'll be looking maybe at equity financing as a possibility if you're looking to grow the business. You'll have more advanced financial reporting considerations. You'll be looking at consolidation and topics related to consolidation. You'll be expected to influence top management. As I said, because you're now operating at the managerial level, you're going to be dealing with finance directors such as David Guy, maybe other directors from other functional areas, maybe even the CFO and CEO on occasion, and you'll be expected then to influence them with the advice that you give. So your people and leadership skills become more important as you move up through the levels of the CIMA qualification. And finally then, you'll be expected not just to consider the day-to-day issues that affect the business, but to get your head up and consider the wider environment that your business is embedded within. That means you would consider important stakeholders like the government, for example, and regulatory bodies, as well as your competition, and considering, for example, the local community in which your company operates. That will actually be an important consideration for Grapple, which is very key to its small locale. So let's jump into the history of Grapple. Founded in 1965 by Dudley Grapple in the country of Zland, where the currency is the Z dollar. So, fictional country. We're actually told very little about Zland in the pre-scene. There are indications that it's a more developed country, perhaps, but we cannot say for certain where this country is based. The fact that this company was founded in 1965 and has endured means that the business has staying power. It has presumably been through tough times and good times, and it has stayed the course. So that's a good sign, and we'll learn later on that it is a reputable business and is renowned for the quality of its products. So they're using the Z dollar. That would lead us to ask whether this is a business with exports, for example, or imports, where exchange rates could affect the performance, the financial performance of the business. It doesn't seem to have exports. It seems to be operating only in the country of Zland, and that is an issue we'll be discussing throughout the pre-scene. Maybe this is a company that wants to consider entering new markets if it is to grow, but it may well have imports in the form of fruit that it's importing for its drinks, for example. So Dudley incorporated Grapple and invested his redundancy money. He was at another drinks company as a sales manager prior to founding Grapple, and he grew the business through taking on a further bank loan and started producing and distributing carbonated soft drinks around 1965. Now, the business, we're told, has grown organically. So, in other words, it hasn't grown through acquisitions of other businesses. Rather, it's used, it seems, the funds that it has generated from sales, etc., to reinvest in the business and to enter new product lines, etc. So that's quite a conservative approach, and it's pretty typical, I think, as well, of a family business. And Grapple is still a family business. Dudley's only child, Roger Grapple, we're told here, worked his way up through the business, started on the production line in 1985. He was quickly promoted and rose through the management positions at the company. Eventually, he took over as CEO. So a couple of things to comment on here relating to the family business. The fact that we're talking about organic growth rather than taking in outside investors or taking on equity financing by issuing shares, etc. They've taken a more conservative approach to grow organically. There is mention of a bank loan, although we'll see when we look at the financial statements that this is a company that isn't carrying a lot of debt, so a conservative approach to growth overall. A word on Roger Grapple. We have no idea yet as to how capable Roger is as CEO of the company. We see that he quickly moved up through the ranks, and we might ask the question as to whether there was maybe a little bit of nepotism with Dudley favouring his only child for the big position. That is another danger, perhaps, of a family business. You can have sons and daughters favoured for the senior positions at the business, and over time then the business's performance would suffer as a result of not having the right people in the top jobs. Now, there doesn't seem to be an indication, though, that Roger is incapable. The company seems to be doing well under his guidance. And in the last 20 years, new products have been sold in recyclable glass bottles, carbonated mixers, still mixers, and fruit juices. And each year we're told there are new flavours introduced, and then Grapple tries to see how the market reacts to each of these new flavours. So clearly they are innovating when it comes to new products, and they're also innovating in terms of their environmental credentials and the glass bottles that they're producing. And this is going to be recognised as quite a key theme in this industry as manufacturers of soft drinks try to stand out from the crowd. They want to demonstrate their green credentials, and it's becoming more important to consumers that companies show that they are environmentally aware and good corporate citizens. So a word here as well on the new flavours being launched each year. So it seems that they launch a new product or a new flavour, and then they see how the market reacts. So it's a kind of a trial and error approach, which is a little bit more costly and risky, actually, I would say. It would be more optimal to conduct market research beforehand and to ascertain whether a flavour is likely to be well received in the market. At the moment, it's quite likely that it's a bit hit and miss, that they're launching certain flavours into the marketplace. Some are taken to, and others are rejected by the market, and that would mean that you've all these sunk costs, and that's a bit of a pity. So, revenues have increased, we're told, over time, and the company's gained market share. We will see just how much market share they've gained in the last year, for example, in a couple of pages' time. They've built a good reputation as well for quality and value for money. So, as well as that, costs have actually been kept under control. So, when we think of quality, typically with a company that churns out a higher quality product, you're talking about higher costs. And with higher costs, you would ideally want a higher price charge to the end consumer to compensate for that additional cost. But the fact that Grapple has managed to keep its costs under control means as well that they can keep their prices under control, and then that ties into the perception of the business as being value for money. Now, we might want to ask at this early stage whether there's actually a bit more scope to raise prices and to go for a more premium pricing offer. And that's certainly something that Grapple could consider. Grapple, on the cost side, talking about keeping costs under control, they get good value at the moment from their suppliers. So they review the price of raw materials every quarter to make sure that they're getting value from the suppliers. They try to keep wastage to a minimum, although it still occurs. So there can be improvements in that area. And one of the important considerations for this industry as well is the issue of production excellence and modernizing production facilities. There will be a few articles we'll see at the end of the pre-scene that talk about potential developments in the manufacturing processes for these companies that could be undertaken by a company like Grapple. Now, all of this manufacturing is taking place on just a single site. So there's a little bit of risk there. If something happens, if there's a fire or something very serious like that, or if there's any kind of disruption and interruption to this site, production could completely halt. It mightn't be the wisest approach to rely on just a single site. So again, that's something for Grapple to consider. Maybe on exam day, you might be asked about the potential to purchase a new factory, for example, particularly if they're looking to ramp up production. So Dudley viewed treating employees well as being very, very key to the company. He wanted to build up a good reputation for that. And I'm not entirely surprised that he would have been concerned with that, because I don't imagine that this kind of factory work, churning out soft drinks, is likely to be the most motivating job. and likely to have a lot of inherent job satisfaction. So if you treat your employees well, ensure that they're well remunerated, as they are, the packages are above the market average, then you will ensure that your employees stay with you and are pretty satisfied. There are also quite rigorous health and safety legislation considerations for Grapple to deal with. The Zland government, it seems, looks for those to be adhered to rigorously. Now, all of that actually makes keeping costs down more challenging for a business like Grapple if they have to adhere to this legislation. And we're told as well that Grapple is on the edge of a small town, and actually the area that they operate in is renowned for its natural beauty. Grapple works closely with the local community to ensure that there is no harm done to the natural environment in any way through their production processes. Now, the production of soft drinks relies very heavily on a good source of water. And the water needs to be purified in various ways, which we'll be looking at when we look at the production process. And it is very important that Grapple manages its production process carefully to ensure that there are no environmental disasters in the area, which would be devastating to their reputation and devastating to the local community potentially, if it's a very small community as well. I would ask you to watch out for breaches relating to the environment. Watch out for breaches relating to the health and safety of workers as well. There are potential ethical issues and corporate social responsibility issues that CIMA actually likes to test, and they like to test them more as they move up through the levels to management and strategic level. Now, Dudley, who was so influential, obviously, in the founding of the company, actually died 10 years ago, and Roger is now the CEO. So Dudley passed the entirety of the equity of the business on to Roger, who was 60% of the business, and his 4 grandchildren, who have 10% each. Now, so it's still a family-run business. And what I would say also is that it's unlikely that the agency problem would exist. The agency problem is where you have a mismatch between the interests of the senior executives running the business and the shareholders of the business. But in this case, actually, Roger is the chief shareholder and the chief executive overseeing the operations of the business. So there's not likely to be any mismatch there in terms of shareholder and executive interests. Roger's children, though, they've kind of gone on to do their own thing. They have their own careers, 10% each, 40% in total stakeholding. And interestingly, it says at this early stage that they would be open to selling their shares. And furthermore, Roger, at the age of 55, is very likely to retire in the next 5 years. So we ask the question, what's the succession plan? Clearly, it's not going to be one of the kids stepping in to take on the CEO role. So what happens when Roger leaves? And is there the potential for an outside investor to come along and make an offer for that 40% stake that the grandchildren currently have? Would there be an outright takeover bid from a multinational business, for example? These are all issues that could potentially affect the business. Grapple is unlisted, we're told. So obviously there are pros and cons that come with being a listed or unlisted company. Being unlisted, obviously you have less access to financing. You have fewer options there. You can't draw on equity financing in the same way. But there are less rigorous regulations that come with being a private company. Having said that, though, Grapple has decided to adhere to international financial reporting standards. As I said before, they're dealing with the Z dollar. So if there are cross-border transactions, there would be issues concerning the translation of foreign currency transactions, etc. At the moment, it doesn't seem they're operating in new markets, foreign markets, but it may well occur in the future. So just a word on the fact that this is a family-owned private firm. There are pros and cons with any ownership structure. This one's no different. The pros with it being a family business is that they typically tend to take a long-term view, and especially if they're private as well. They don't have shareholders pressuring them for short-term profitability, etc. They are definitely pros of being a family-owned private business. Cons, as I've said before, of being unlisted, there are fewer financing options because you're not able to draw on equity financing by selling shares to shareholders. There are dangers relating to nepotism, for example, which we discussed before, and conflict can be particularly nasty in family businesses. If there's a power struggle between siblings, for example, for the top job, things can get very, very bitter indeed. Now, I would say, though, it doesn't seem that that issue is a big consideration for Grapple, given the fact that Roger's children are very passive shareholders, it seems, in the business. They're willing to sell. I don't see any of them getting upset when Roger steps aside that they're not being made CEO. They seem to want little to do with the business other than potentially cash in on the shares they actually hold. What about the industry itself? We're told that the soft drink sector is a mature section of the beverage market. When it comes to soft drinks, I should mention that the soft drinks are any drinks that do not contain alcohol. So, I mean, that is a large and varied market. You could be talking about drinks with a high sugar content, or you could be talking about bottled water and drinks like that. So bottled water and low calorie and low sugar alternatives to the high sugar carbonated drinks that we have traditionally grown up with, like Coca-Cola, for example. The low calorie, low sugar and bottled water alternatives, they're actually doing very well in recent years, particularly in more developed markets, as people worry about sugar, and sugar seems to be getting a very bad press in recent times. Drinks with high sugar content, the type that Grapple actually specializes in, are actually in decline, but still they represent the biggest part of the market. Carbonated, in other words fizzy drinks, and non-carbonated still beverages. The carbonated drinks are still the biggest segment of the market globally, but as I said before, they're in decline. Now, this is a mature market in Zedland. It's been going for over 100 years. There are two main manufacturers. And what we can say about a mature market, when we think of the product life cycle, where you've got the mature phase of this product life cycle, you'll be talking about peak sales and peak profits at this phase of the product life cycle. Also, it's quite stable in terms of the number of competitors you're faced with, which ties in with what was just said here. There are two main manufacturers, and it will transpire that we're looking at a kind of an oligopolistic situation with very few competitors in Zedland overall. It's pretty stable. And the cost of serving customers is at its lowest there, because companies have economies of scale, so they can spread their costs out across a wider area and a wider number of products and a wider number of units sold. So the industry seems to be pretty robust at the moment in Zedland, dominated by two main players, Party Pops and Carnival. And they're both very strong brands. They're actually global brands, and they're listed companies as well. So those companies are going to have a good degree of financial strength. They can draw on equity financing to make bigger investments than some of their smaller rivals, such as Grapple. They have economies of scale. They have brand power. They're well known. They have global presence. So they're the giants in the Zedland market. And outside of those two giants, you have a number of smaller firms. The smaller firms have been consolidating through acquisitions in recent times, although two firms, Tiger Fizz and Grapple, have held out, and they still have their original family members running the businesses. So it may well be that Tiger Fizz and Grapple are being quite small fish in this market. could be takeover targets. I would say Grapple in particular looks attractive due to the fact that it's been gaining market share in recent times. It's grown from 6% to 9% in the last year. That's very, very good growth. They're by far the strongest mover in Zland. That's very good news, whereas Party Pops and Carnival have actually declined ever so slightly in terms of their market share over the last year. Still, those two firms own 82% of the total market. They're very, very dominant. Tiger Fizz has actually had problems in the last year, declining from 7% of the total market to 5%. So Grapple's actually overtaken its rival Tiger Fizz. So we seem to be looking at an oligopoly here. And with an oligopoly, this structure shows that there are few rivals in a marketplace. They keep a close eye on one another, but things are pretty stable. They hold prices at their current levels. There are no price wars here. Nobody wants to really rock the boat too much. And as well as that, you tend to have high barriers to entry with such a stable environment, because these are very well established brands. They've spent a lot marketing to get to the point that they're recognized by so many people in their market. So it's hard to disrupt this kind of market setup. The market size is significant. We'll see later on that the industry, the soft drinks industry in Zland is worth about 1.6 billion Z dollars. The importance of having a strong brand cannot be overstated. Party Pops and Carnival have big, strong brands. They have legacies based on the significant advertising campaigns that they have pumped money into. Those campaigns promote the emotional and lifestyle attachments associated with their drinks. After all, what we're talking about here is sugared water. It's not really much to write home about in terms of what goes into their products. They're not going to, make you significantly happier. Quite simple production for these drinks. Very few raw material inputs, etc. Water is the big key ingredient, and the rest is sugar and some flavorings. So when you're talking about that kind of product, it's very, very important that you market them very well. And it seems Party Pops and Carnival have managed to do that. They also rely on big data for all aspects of the business, from marketing to manufacturing processes. You'll know from your studies, your objective studies, that when you're talking about big data, you're talking about the 3 V's of volume, velocity, and variety. This is the challenge of big data. It's hard to summarize this kind of disparate information, but the biggest companies now are managing to do it. They're pumping a lot of money into making sense of this big data, and there will be mention of it later on in terms of Grapple, and they seem to be making a couple of moves into analysing big data themselves. Now, Party Pops and Carnival need to sell high volumes because they're actually cost leaders. And as a result of being cost leaders, in other words, they're looking to charge low prices to their consumers. Their profit margins are actually some of the lowest in the industry. We'll see later that Grapple's profit margins are quite robust in comparison. That's because Tiger Fizz and Grapple actually want to differentiate their offer and focus on quality rather than price. They don't want to get dragged into a price war with these industry giants. And a big part of the reason that Party Pops and Carnival have low margins is due to the fact that they spend so much in advertising and indeed packaging innovation, and that erodes their profits. But this is a necessary evil for these firms because they have such wide reach and they built up such a reputation over time. So we're talking here about 2 different approaches under Porter's generic strategies, which you would have come across in your E2 studies. With Porter, you either opt for a differentiated offer focusing on quality in the way that Tiger Fizz and Grapple have done, or you try to be a cost leader, keeping your prices low, keeping your costs low as well. It's very important with that type of approach as a cost leader that you keep tight control over your own costs in order to be profitable. Grapple and Tiger Fizz, they don't actually distribute globally in the way that Party Pops and Carnival do. And this also aids their profit margins. The fact that they're not selling overseas in the way that Party Pops and Carnival do gives them another cost advantage and allows them to have fatter margins. In the industry, there is a focus currently on manufacturing processes, which the companies in the industry are striving to make more efficient and effective in order to save costs and improve margins. And we're going to see plenty of talk about new production methods in the industry towards the end of the pre-scene. These changes in the factory layouts and automation are going to require big capital expenditure investments. And that is something that probably the two big companies in the industry, Party Pops and Carnival, can do more easily given their big size compared to Grapple and Tiger Fizz. When it comes to being more efficient and effective, you think of the 3 E's, which you would have come across in your E-pillar studies. Efficiency deals with the conversion of inputs into outputs. Effectiveness deals with the extent to which the organization delivers what it is intended to deliver. Challenges then facing the industry: health lobbyists are starting to make people aware and the government aware of the dangers of sugar. And as a result, they're pushing for sugar-free alternatives to current soft drink offerings. These soft drinks that are high in sugar are energy dense and nutrient poor. And interestingly, it mentions here though that there actually hasn't been that much of an impact on the market yet, I would say. But in more developed markets, it seems that there is a bigger impact as the message gets through as to the dangers of high sugar content foods and drinks. The way in which manufacturers have responded to this push against sugar is with a range of sugar-free alternatives and energy drinks. And they've also put a focus on sophisticated flavours and colouring, colourful packaging, and the release of special editions. So they're trying to offset the danger of a backlash from government forces, regulatory bodies, and indeed parents as well, the parents of children who typically purchase these drinks too. With excess sugar, there is a release of dopamine, which is a hormone that induces pleasure in the brain, and it's actually addictive. So studies have started to show that sugar is a highly addictive substance, and of course that is bad news for producers such as Grapple. So there are kind of a couple of gimmicks being used to fight back against the health lobbyists. They're involving celebrities, well-known people that advertise the drinks. There are new bottle tops that maintain the fizziness of drinks. They're being developed by Party Pops and Carnival. They're investing large sums actually in R&D to develop these new bottle tops. They're trying to invent new styles, new packaging, etc. to maintain their dominance. The question needs to be asked, will these innovations be enough to ward off negative perceptions relating to sugary drinks? It seems to me that there are a lot of gimmicks kind of being employed by the soft drinks manufacturers, and that they may be fighting against an inevitable pushback against high sugar content drinks. So drivers of the success within the industry, we're told that there are two main drivers of success at the moment. One relates to green credentials and the use of sustainable packaging, etc. And that ties into corporate social responsibility. And the second is quality of the product offering. And Grapple is already emphasizing that. So no wonder it's winning market share. Opportunities in the industry, 3 are identified here. Brand extension and product development, offering more varied product range using new flavors and improved recipes. That will differentiate brands from one another. And Grapple actually has a history of doing this, launching new flavors, which we were told about earlier on. So it seems to have it seems to have its finger on the pulse in terms of that opportunity. Packaging, as was mentioned before, using sustainable packaging and working with new packaging designers. And finally, another big trend in this industry is consolidation. Larger entities, the two big players in this market, they'll continue to dominate. There are high barriers to entry, we're told here, and smaller producers are trying to respond to the challenges laid down by the dominant forces in the market by consolidating further. I do think that Grapple may need to alter its growth strategy and to be more aggressive when it comes to growth, not just opting for organic growth, but maybe taking on a bit more debt or even listing the company in the stock exchange to make bigger plays in the market, or they risk maybe being taken over themselves. And a word about consolidation, taking it a little bit further. You think of the two real-life giants of the industry, Coca-Cola and PepsiCo. They actually control 70% of the US market and have access to a wide bottling and distribution network. There kind of exists an illusion of choice in the soft drinks industry because many brands actually fall under the umbrella of the big companies. Coca-Cola, PepsiCo, Dr. Pepper, Danone and Nestle, they own most of the brands you actually encounter in the stores. And I want to tie this section up with a discussion of Porter's 5 forces. The threat of new entrants in this industry, I think, is low due to the fact that barriers to entry are high, as was discussed earlier on. Rivalry, it seems to be medium in the home market. There are only 4 major players, we're told of, although the 2 big players in the market are quite dominant. It seems to be, though, high worldwide if you're talking about behemoths like Coca-Cola and PepsiCo with the control they have, the access to distribution networks, etc. You're talking about big competition worldwide, so it's hard to break into foreign markets. Supplier bargaining power is likely to be low in the face of these big companies such as Coca-Cola and PepsiCo. Customer buyer power at the corporate level, I would say it's quite high because a company like Grapple, we'll be seeing later on, deals with supermarket customers and retailers of that sort. They have quite high bargaining power. With consumers, I would say it's medium, the end consumer. They have a lot of choice, although as I said before, it seems to be kind of the illusion of choice, as a lot of the brands fall under about 4 or 5 big multinational businesses. And substitute threats, you would have to say, are medium to high, given the fact that high sugar content drinks seem to be under attack, and low sugar alternatives, bottled water even, are becoming more popular.